Welcome to the Wardroom. Please join us for our discussion of the day. Today we're talking about modern monetary theory. Modern monetary theory. So you're going to probably hear this a lot from Democratic candidates, but one question you can ask yourself is the Green New Deal, Medicare for all, jobs guarantee, how are we going to pay for this if one of these Democrats become elected? And it's through modern monetary theory. So, in case you didn't know, you are a part of a banking system. You're a part of a financial system. You're born into a medical system. You go into an education system, and then you become a part of a financial system. However that affects you. But if you work and live in a first world country, you're a part of this system, and in the United States we have the Federal Reserve banking system. So what does that mean to you? Well, the Federal Reserve is in control of the Fed funds rate, which is basically the interest rate that banks loan each other overnight on overnight loans. That's how money's generated in the economy. One way is on credit being paid back in the form of interest. So that affects the money supply. So without getting into a deep lesson of what the Federal Reserve does and what it means to you and how it affects the economy as in large as a whole, I could spend 6 episodes on that. So the point of today's episode is the proposal for modern monetary theory, and you'll be hearing more about this whenever Democratic presidential debates are not talking about whatever their narrative is for the week. So I guess this week it was, racist comments, Trump's a racist, and whatnot. But eventually they're going to start diving into the economics of things and how they could better run the country as a, president using basically this theory, which are all going to adopt. So without further ado, the Fed cut interest rates on July 31st. What does that mean for you? Well, that means a lot. If you have a loan, car loan, student loans, you have a mortgage, you have any variable rate interest that you pay on your credit cards or on your loans. If you have a fixed rate, probably it won't affect you as much, but it does affect basically prices in the economy eventually through a downstream trickle effect. But initially, in the short run, it will affect variable rates, and it also affects the rates that the banks pay each other overnight, because it's a Fed funds rate is what the interest rate is based off of for banks. So it's important to know these things. You live in this financial system. If you don't know how the financial system works, you have a problem. And we're not necessarily going to come on here and just lecture you on how it works. You can take a class in money and banking, and there's plenty of YouTube videos, but we're going to spend the time today talking about what the proposals are, how we're going to afford these incentivized programs like a jobs guarantee for all, which is what they're claiming is universal employment from these Democratic presidential candidates, and how actually the Trump administration isn't too far off from a modern monetary theory. So we can put politics into this big equation because it's definitely going to be proposed at some point, whether it's 2020, 2024. What we have right now as far as the theory, modern monetary theory is concerned, doesn't necessarily have all the answers, but if, God forbid, a Democratic presidential candidate wins the election in 2020, they're going to propose this, and they're going to sign all these bills into law that are going to have Medicare for all, universal health care, the Green New Deal, for examples. And how do they do that? They're doing that by basically printing money, having Congress be in control of printing the money. So the way it works right now is the Federal Reserve is an independent subsidiary, essentially, of the federal government. It acts on its own, and it adjusts interest rates, for example, they have a slew of tools that they use, but they adjust interest rates based on inflation in the economy and where employment numbers are. So that's actually the fund's mandate is price stability, and they use price stability in the economy by changing different things that banks do, but mainly through interest rates, and then also maximum sustainable employment. That's the other half of their mandate. So these are important things to know, and I would challenge you to do your research on this and formulate your own conclusion. Anything that we discuss on this show, we're just pulling data and talking about relevant points that could affect you in your life and how they will affect you if they change in society. But a Fed rate cut, basically what you need to know is the Fed cut rates by 25 basis points and how it affects the average everyday person. Lower mortgage and credit card payments, like I said, on variable rate lending, a little relief for student loans or auto loans. Student loans is another discussion, how it actually affects a lower rate on it. More favorable borrowing terms, which actually stimulates the economy. All this stimulates the economy, but probably the most and biggest one is more favorable borrowing rates. And basically, you would go get a car loan for a cheaper rate. You would get a mortgage for a lower rate. Even though I think now this was 11, 10, 12 days ago that the Fed actually lowered rates. Mortgage interest rates are back to where they were before that. Stock performance is also generally there's a stimulus in the economy when the Fed lowers the interest rate because it's cheaper for companies and organizations to borrow to fund future projects in their business. There's ways that you can kind of play this in the market that's advantageous for investors. I won't speak on that. It does have an impact on your savings, especially if you lock in like a certificate of deposit. So it has an effect on your life, mainly for most people, because people live beyond their means probably a little bit, but they also finance bigger purchases like a house and a car, and obviously your credit cards. They're all affected. So that's important to know what the Fed's fund rate does. Now, I think people believe that the Fed just hits a lever and then the interest rates automatically change. No, they have to go and do open market operations. And there's a few different ways they can do this. They can lower the assets that are on their balance sheet, introduce more of the assets that were held, like a mortgage-backed security, back onto the market, which artificially keeps interest rates low. I won't get too nerdy into the science of everything, but the Fed actually has to do something. They can't just magically say interest rates are going to be 2.25 without doing anything. They have to, buy bonds off the market, sell bonds off the market if they want to lower or raise interest rates. So it's important to know that. It's just not some arbitrary number that gets, chosen. They actually have to stimulate and target that interest rate by introducing assets onto the market or taking them away, and that affects the monetary policy, or that affects the money supply of the whole economy. So that's important to know also. I'm kind of digging into the weeds a little bit with this one, but we'll move on from just what the Fed does and kind of talk about what actually happened. I think the interest rate was unwarranted. The interest rate cut was unwarranted in July 31st, no less, because that's the first time in history that it's actually ever happened, and it didn't need to occur. We were at almost max unemployment. Unemployment numbers have been low. They've been low for a very long time. We keep producing jobs on average every month very steadily, even with the tariffs and the global slowdown implications, which is one of the reasons they said that they cut rates, was for the global impact of an economic slowdown because of the trade wars, basically. But unemployment's been stable. inflation's been moderate. The Fed uses something called the core PCE deflator. They track prices on all goods that are bought in the United States, essentially, and they track them over a period of time, and that gives them an inflation. And it's a deflator because it adjusts for the time over. It adjusts over time. That's why it's called a deflator. So basically, I feel like the Fed president or the Fed chairman, Jerome Powell, had a little political pressure on his shoulders to actually do something. Trump's been tweeting a lot, and that's generally how he sparks a change in the market sentiment recently. So with different things that he can do or say, right, like just slap on tariffs, punishment tariffs to China, for example. That was a big mover in the market the day after the Fed cut rates by a quarter basis point. So it's interesting to watch the political dynamic right now happen. This might have a lot to do with Jerome Powell is the richest, as far as net worth is concerned, chairman to ever be on the Federal Reserve Board. So that's kind of just, I don't know what that really actually means as far as a difference in his decision making, but it's important to understand that he's a very wealthy man. So it's interesting to see how politics is playing a role to the Federal Reserve when it's supposed to be an independent organization separate from the federal government. And I'm not going to get into this, how the Fed was created, a history lesson, who is in charge of the Fed. Do your research and formulate your own opinion on that. We're talking about what's happening today, how it affects you, and what is the possibilities going forward into the future, right? That's the whole purpose of the show, basically. But trade tensions are affecting the supply side of economics right now, right? So we're a consumer-based economy. Most first world countries are. We buy things for cheap, the cheapest that we can get them, and we sell them at a higher price. It's arbitrage. It's been going on since money was invented. And, the United States is a consumer economy, so it's very affected by things like tariffs, which ultimately the consumer pays for. And the fact that Jerome Powell or the Federal Reserve as a whole, is lowering rates because of global trade tensions is quite remarkable. I don't think we've seen that for any time, really. Although it does have an effect on the global supply side of things, and that's where we're seeing China's taken a hit. Their currency has dropped tremendously since at its highs a few years ago. Now it's above 7 to the US dollar, 7 yuan to the US dollar. So they have reasons for doing that. They can artificially do it. But the main point is these trade wars or the tariff being slapped on were the reason for the rate cut. I don't believe it was necessary. They did it anyway. They're probably going to lower rates in the future again. But this is just what's happening now and how it affects you. What's being proposed from these presidential candidates, whether senators, congressmen, mayors, they're all going to adopt the same type of economic theory. And the economic theory that's been highlighted as being able to pay for their programs, all their incentive programs, bigger government, the ones that I mentioned earlier, plus more probably, is to instill this modern monetary theory, take power out of the Federal Reserve's hands and the tools that they prescribe to influence the market so we can stay at a steady clip. That's the whole reason why the Fed really exists, is so that we can continue to have economic growth over a period of time. And there will be downturns, and they have tools to adjust. And the things that the main point in modern economic theory or modern monetary policy is the Fed or the central banks are running out of ability to control economic stimulus and deflation. This has happened in Japan. They've been at negative interest rates for a very long time. Europe has been in a lost decade. Probably going to talk about Europe in the future a lot because it's they implement these type of central banking rules and they don't necessarily work that well. So there is a problem. I'm not going to admit there's not a problem. We're in the United States. We have a advantage where our currency is the reserve currency that the world primarily uses. So we have an advantageous way to go about adjusting our economy and how it fluctuates, and other central banks around the world have a hard time actually doing that. So it's quite interesting to see the differences in the central banks around the world. Now, the Federal Reserve is an independent part of it's independent of the federal government. The other central banks around the world are a part of the federal government. So there's a big difference in how they all operate. They all have different mandates, but they're very similar to what we do here. So basically, modern monetary theory is puts the control of spending, inflation, and unemployment, because there's a jobs mandate that they're proposing with the modern monetary theory, into Congress's hands. Now, this is where I have a problem with it. I don't know if you've seen what Congress does, but it's not very much. And the fact that we have politicians or candidates that want to put more power into Congress's hands to make a bigger government occur is a problem. So basically they're proposing that Congress is able to print money without having an intermediary like the Fed between the U.S. Treasury and the banking system. So the federal government would print as much money as it needed. Any federal government could do this that has a fiat currency, print as much money as they need to keep track of all their spending, or basically they can just spend frivolously all they want, and all they need to do is print more money to pay for all the programs that they incentivize. So while that may not sound like a bad idea, that's basically saying I'm going to pay myself to live to my living standard. And if you're a human being, if you live in a first world country, that could be, your living standard could be very, very high. So, and you could have tremendous economic growth. If I was paying myself to live on a standard, it would be super high, and I think most people are the same way. So it's not any different when a Congress or a cabinet of government does it. So that's how they're going to pay for all these programs to incentivize people to really do nothing, especially if there's a jobs guarantee for all. And what that is right now is a guarantee. If you lose your job during an economic downturn, which I don't know how they would at any given moment decide we're starting an economic downturn and then people are getting laid off, they'd have to really watch things closely. But if you lose your job during some point in a deflationary period in the economy, you're guaranteed a minimum wage salary. It's basically unemployment from the federal government until you get hired on again. So another argument that they're making for this modern monetary theory is that if you lose your job, you can earn this salary and work for the government until the economy stabilizes again, and then you could go back into the private sector and make the money that you were making before. So that sounds like a good idea at first, but knowing human nature and how people will do the least amount of work for the outcome of their life, whatever that may be, you'll have a lot of people taking advantage of this program, basically getting free money for not doing anything, and it has to be during an economic downturn. So Medicare for all, it's healthcare for all. I'm pretty sure everybody lives through this Obamacare situation, and they're looking to expand upon that. And one way they're going to do it, they want Congress to be in charge of printing money. So to pay for your healthcare, that's universal healthcare essentially. And I always like to say, if you want to see what universal health care is like, go look at the VA 5 or 6 years ago and see all the stories coming out of the Veterans Affairs hospitals. It wasn't good. And if you think that having the government control things is a good idea, just do yourself a favor. Go to any U.S. post office and look around. Look around at how updated things are. Look around at just the way the layout is, how the employees or the U.S. postal workers treat you. And then, when you make that observation, go to a FedEx store or a UPS store and take in what a parcel company, which is essentially everything that the post office does, you can do at independent shop like the FedEx Kinko's or UPS store, right? And note the difference in the two. So one's a government-run organization that has limited funding and pay their employees the lowest possible rate, even though they have pensions and incentives to be a part of this federal government program or organization, and then go to an independent organization like UPS or FedEx. There's more, DHL, I don't know, but those are the ones that I can think off the top of my head. Note the difference. Government run, free market run. You'll notice there's a huge difference in the way those two things are. So that's just my challenge to you, as if you think the government's good at doing some things, they're not really good at doing much as far as I'm concerned. And the bigger the government is, the worse it is for the people that are involved in getting, if they work for the federal government or they're incentivized by the federal government because they have some sort of obligation to live the way that they do, which is to get free money, essentially, is what I mean when I say that. So, some problems with modern monetary theory is that the national debt would get out of control, and some people would argue that national debt isn't a big deal because you could print money to pay for your debt. You're basically living off of a credit card by having another credit card that you're paying for that has an endless supply on it. There's no limit. So you have your credit card that you pay for things that you live in your life, and you have that's limited to your standard of living, and then you have an unlimited credit card, and you use both to pay for your future living expenses. But the one unlimited credit card, there's no limit to the money that you can put on the other. It's a system that doesn't work. So you quickly ravel up debt, basically, and the government the debt would skyrocket. It's already at high. We're at $2 trillion now. It would skyrocket. It's fiscally irresponsible to have debt balloon. Inflation would be out of control. Now, the modern monetary theorists are going to say, well, we'll put price controls. Congress will be in charge of price controls on goods and services in the United States. Think about that for a minute. What does that sound like to you? I mean, it's socialism. It's their socialized version of, monetary policy, but it sounds like communism to me. We're going to put price controls on goods. It doesn't sound it. People are going to garner those goods and sit on them, and it's going to be like the Cold War all over again, where we have all these squatters, stacking supplies in their house, because that's basically what it is. But it puts pressure on prices. That's the main idea here, is that when we control prices, we're saying that these tires on your automobile can't be higher than this because people can't afford it. So what do you think the quality of the tire is going to be? It's going to be degraded because the company has to produce tires. So you'll have government-run tire production. That's what it comes down to eventually. So you'll have state-controlled everything. So this modern monetary theory is just another way of saying we're going to introduce socialistic ideals into the United States, and it's just the tipping point. So be very aware of what it actually is. This is not, there's good things to the theory, there's a lot of bad things, one being price control, one being national debt. Anybody that's printed money, any country that's printed money and lived off of it, hasn't done very well. Look at Venezuela, their petrodollar failed miserably. The French government in the early 80s tried this very theory out. Didn't work. They quickly returned. The German government did it in the early 90s. They spent 6 months trying it out. Didn't work. So it's very dangerous, and there's limits to it. There's limits. And basically the limit on supply side of things is real resources. There's a limit on workers, how much they can work. There's a limit on the supplies. That's where price controls come in. There's a limit on the real resources that companies actually use for production, right? Unemployment would be a reason for the government to spend more. So you'd have more people working for the government. You'd have bigger government in this very ideology, which I don't think is good at all. So another big problem is we're putting our trust and faith in Congress. So this is my argument basically of the day. These ideas are not to the best of the people. And if you know anything about power and how the humans interact in a hierarchy type of structure, it puts a lot of people down on a level playing field. Its idea is to raise people up out of poverty, but it actually brings people down that have discretionary income. And it puts people that, there's some point, I don't know what the income would be, above that. And those would be people that probably work for the government. So it turns it into a very aristocratical ideal and form of government. So it's a very scary thing. We got to question this ideology and see if it really makes true sense, and I challenge you to do your due diligence and research on modern monetary theory and the implications of it. I'm not saying that it's completely wrong, but it's definitely not the best way to go about stimulation over the long term as far as economic growth is concerned. So with that being said, I'm going to turn it over to Mr. Mike here. I'm sure he's got some questions and statements to be made. So what do you think, Mr. Mike?
All right. So first, I want to correct the record. As a student loan, or as somebody that pays student loans, they're fixed rate by federal government. So we're not going to see any big changes with student loans unless you're getting it from a private lender, right? Mm-hmm. So there's a potential that you could get a private student loan, and it would have variable interest rates. Yeah,
it's fixed once a year.
Yeah, it changes.
Exactly. So it'll change
per even semester, I think, maybe a year, but it does change. But at the end of the day, it only affects that moment in time, and then it carries with you for the rest of your loan payment.
Yeah, people have private student loans that were prior to the financial crisis, so they probably have a variable rate on it, and they get affected immediately. People that have student loans from, I think the last independent bank that did it was like 2011. They're all fixed rates because they're all guaranteed by the government, and the government does adjust the rates over the long term. So it does have an effect. Is it immediate? No, but if you have a variable rate on any other type of debt, it does make a difference.
You're asking us to challenge you, and sure. I've got an entirely different perception of how this modern monetary theory operates.
Sure.
First, I'd like to maybe divorce the idea that this theory exists solely with the purpose of printing money, right? Like I don't think that anybody's idea is to print money, because with printing money, that means you're going to spend more money, and with spending more money, you're going to get inflation, right?
Right, yes.
So that's something we're trying to avoid, but I think that's also one of the limits for where these theorists want to operate, these economists want to operate within. On one end, you have inflation, and on the other end, you have unemployment. So they want to operate within the spectrum that says, hey, let me just turn that off real quick.
It's okay. Yeah.
Yeah, they want to operate within the spectrum that says, hey, we don't want unemployment, but at the same time, we don't want inflation, right? And I think that's something that every American should agree with, because we don't want to see our money devalued, but we also want to be employed so we can earn money, right? So
yeah, and that's what the Fed does now. So getting away from that is the balance between unemployment, inflation, like that's the mandate of the Fed. They want to have that in a range, and they want it to be a healthy for growth. The problem with the theory is it takes the ability for the Fed to make these adjustments out of their hands and places it in Congress, and Congress casts a vote to, first, what is the budget for the year? How are we going to pay for incentivized programs? And then second, how much money do we need? Oh, we need more than we have on hand. Let's make sure that we print more, essentially, because taxes aren't going to cover all of these. Taxes barely cover the things we do now. So,
No, and I do see what you're saying. I think current kind of debt to GDP ratio is about 100%, 105%, something like that. But just because, and I agree to your point, like just because we borrow, it doesn't necessarily mean that there's going to be prosperity, right? Like just because the government borrows, it doesn't mean that money is going to be spent properly. But I think at the same time, right, like a government budget, right, looking at the perspective of a government, is not the same as a household budget, right?
Right, yeah, not even close.
While you use the example of credit card to get yourself out of credit card debt, right, which is something that unfortunately many Americans do, the government can print money, right?
Right, yeah.
And so they have this concept that basically a government can't go bankrupt.
Right, yeah. So the national debt's not a bad thing for federal government to have.
Right.
It's like having, and it affects the rating that independent credit bureaus give the governments, right? I think the U.S. is a AA. It had always been a AAA until the financial crisis. We had our credit rating reduced, which basically says the U.S. government has lower credit score. Essentially, they'll have more risk in repaying the bonds that they issue. So comparing it to household credit, no, but understanding that the debt is paid by taxes is a big deal. So there would probably be some sequestration of the government spending, especially in Congress, where like you have people that are limited government and you have people that are more government. So the people that are limited government would stifle the more government by interjecting with spending. So then we have taxes on travel as well. That's a great point that I failed to mention. So taxes would be higher in this instance.
Yes.
So over the long run, which is bad,
Can be bad.
Can be bad if you have some sort of decent income. So we're talking about higher taxes.
Right.
With this.
But, I'm a poor student right now. I'm not going to lie. I'm not saying that I don't want taxes to be as like non-evasive for most Americans, right? Obviously, I don't think that if you are Jeff Bezos that you can just not pay taxes, right? With billion-dollar tax cuts to your company. But that's I just wanted to get that out there. And so what are we actually specifically, right? Like what are we as government? What is the government trying to do with the printing of money, right? And so they're realistically only trying to pay off their debt obligations, right? They're not just printing money to print money. I think maybe not all politicians understand. Maybe not everybody in the government understands. I think that's the reason why we have this show. But at the same time, it's like the people that are smart enough to see where the money goes and understand how the money works, right? We're not trying to just say, here's money, we're going to pay off some new program for the sake of paying off that program. And I think that's where it kind of gets away from the Medicare. Right?
So, and what's going to happen here is that all the arguments that I had mentioned, freely spending, fiscal irresponsibility, excessive inflation, higher taxes, congressional price controls are going to be argued the opposite. Like it's going to be a good thing. Taxes, for example. Well, it'll be like, oh no, it'll take, by printing money and paying for incentivized programs, it'll take the burden off the taxpayer, right? And the taxpayer's money is essentially useless at that point. So we might as well not even pay taxes. So, that's not what's going to happen. Taxes are going to go up. I'm arguing that taxes will go up.
Okay.
In this instance, because there'll be sequestration, because we're talking about having faith in Congress to make an agreement on something. And that's where the problem's going to lie. Unless everybody gets on board with this modern monetary theory and printing of its own money. But, people look at past examples to make future decisions now to get future outcomes, right? That's how people usually do things. I'm not saying that equates to the same thing here, because past is not necessarily always indicative of future results, right? So we can't necessarily just say that the examples that I had mentioned, all the South American countries had tried to do this. Chile tried to do it, Argentina, Venezuela, France and Germany, first world countries that tried and failed when this theory was first came about in the late 70s. So looking back on how governments operate, it never had worked, and the differences that what they're proposing now are very minor. So it's essentially the same theory from 40 years ago that these presidential candidates are all going to adopt, and they're all going to push this narrative as it being good for the average everyday citizen of the United States, especially when it comes to universal health care, universal employment, and then lower taxes. When you break down the numbers of it, it seems to be really a myth. So they're going to be selling people this idea.
But you bring up an interesting point. You're saying that this one thing will affect all of those, and maybe that's true, right? But I think you and I can both realize that no one thing has such a causality on all of those different programs, right? It's gonna come to, and what you consider the threat to be Congress not acting responsibly is going to be that same Congress needing to act responsibly, right? And so maybe at this moment in time, maybe they're playing into specific interests, right? And they're trying to make a name for themselves. Maybe this is really just a buzzword of the week, right? And everybody's. I
hope it turns into one, so people watch this video,
talk about it. But we can't compare ourselves to Europe. We can't compare ourselves to South America, because, quite honestly, in Europe, and this is the biggest thing about I think this monetary theory, right, is that you must be a sovereign nation with your own currency, right? Fiat, you can't just, let's say in Europe, for example, as Germany, you can't just print your own money. It's controlled by the EU, and so they're kind of not pursuing this right now. Maybe they pursued it in the past, it didn't work out, but there's a lot of factors that could go into that I'm questioning right now. I admit that I'm definitely not an expert on a topic like this. I know what I've read, I know what I've seen from some of the advocates for this type of monetary policy change, and I just also want to question what perception is in the economy versus like what the reality is. Like we might see some hard hits.
Look, but we're not going to say that trying this in the U.S. will be the exact mirror of what it has happened before in the past. But what we're doing essentially is politicizing the flow of money and inflation and deflation in the country, which affects everything. Jobs, affects state incentive programs too as well. We didn't even touch on that. So, because they get funding from the federal government. So there's a lot of red flags with this, and I'm pointing them out now because coming into next year, when this 2020 presidential candidate for the Democratic Party, whoever it may be, is going to be, and they question them on economic policy, this is what they're going to go to. And I see it as nothing but problems. It's bigger government. It's, maybe incentivized programs that sound good for, people that need incentivized programs. But from my, worldly experience, people that live off of incentives do just the very little to get the incentive over the long run.
And I believe it is your obligation to try and call this out. Nobody should just take this at face value. But I tend to ask myself, what is the problem that these Democrats are trying to solve, right? And I think it seems to be this idea of affordability for their programs. They don't want to be cut off and say that they can't afford them, right?
Yeah.
Because they truly believe in these programs, and we must admit that their belief is what they're going to run on. But at the end of the day, they're talking about and questioning kind of where that money is, where those deficits are having a strong action, right? Like, is tax cuts the way we want to go about it, right? Or is kind of relieving some of the problems that many Americans face, right? Whether it be affording education, whether it be affording healthcare, are those problems more something that they want to resolve a little bit quicker? And so it's all going to be a matter of timing, I think, right?
Yeah.
Are they doing it now, right? And is it affecting people now? And that's going to be justification for them using this theory.
Right, so their demographic for this is people that probably need incentivized programs to essentially get them through, especially a downturn in the economy. So I wouldn't be surprised if they manufacture a downturn in the economy to push this legislation if they get elected. But they're going to use climate change right now. That's what they're doing, specifically. They're using climate change as that's what the Green New Deal is about. It's about having an issue, right, which is climate change, and then pushing government spending to solutions to that so-called problem, right?
But it's not just government spending. Sure, there is spending involved, but it's to try and incentivize corporations to take responsibility.
Right. And I understand the argument of having morals and ethics in corporate entities. That's a whole topic of another conversation, and whether or not they're actually moral or not, and especially when it comes to the environment. But they're going to push it as a sales pitch to people in this election cycle as we need to do something about climate change. They're going to push it as a sales pitch to people for universal health care. They're going to pitch it, it's a big sales push for lower taxes, right? They're going to push free education. And the only way that they're going to ever pay for any of this is by having the federal government in control of its ability to afford it. And they're not going to do that with an independent banking system, which is what the Federal Reserve is. So they want to dismantle the Fed, but the way that they're going about doing it is completely asinine, and it's introducing socialistic ideologies into the system. And it will be only the start of a failed experiment as far as I'm concerned. And we're looking at past data and how these things have rolled through in countries that have tried them. So I don't know if it's going to work in the United States, but knowing human nature, and we're talking about behavioral economics of what people do to garner themselves incentives, right? It is very scary because people don't necessarily act in a moral and ethical way to get the incentives. Take anybody that's been on unemployment for a very long time and the way that they live, and you can see what I'm saying here. So,
okay, I can concede that point, but at the end of the day, right? We've got to set up policy, right, for the good actors, right? We can't consider, and this is true in business, this isn't true in government, we can't consider all the bad actors, right? We want to, right? We want to try and minimize our uncertainty so we can make the most prosperous path forward, right? but we just can't, right? And that comes through experience, that comes through experimentation, right? And if a system has been working for so long as you're claiming that it has, right? There do need to be changes.
Well, I'm saying there's not any problems.
Right.
We're not short of our problems that need to be solved. I just think that this is the wrong way about going and doing it. It's from a federal government budgetary
and so
standpoint.
You're talking about specifically the Treasury being able to print their own money.
Right, but having the ability to print money as an afterthought of what we're spending. So that's why I use the credit card example. We're spending to a standard of living, but then, we're over our, tax income, right? That's how the government gets revenue. But so we're just going to print up to that standard of living.
But at the same time,
print up to a standard of living. So the government grows bigger. People that are on these incentives, the population grows bigger. Look, I'm not saying we're a true free market.
Right.
And this is where the health
and
care
you can't be a true free market if government has any play in what you do with your money. That's obvious, right?
Right. Well, we're not a free market. I mean, if we were a free market, I could come to your door.
We wouldn't be subsidizing any companies, right?
I could come to your door with a generator and say, hey, I'm offering power at this kilowatt rate per hour. It's 5 cents cheaper than what you're paying. But can I do that? No. Same thing with healthcare, right? When we introduce Obamacare into this is basically what Medicare for All will be. It would be a more paid-for version of Obamacare, right? Meaning that we're printing money to pay for it. We took the ability for states to offer health care out of the public market with all these regulations on insurance companies. Insurance companies were dropping from state markets left and right, and it left people with little to choose from. And that little amount, sometimes only one healthcare provider in some states, right? What do you think happened? Well, the prices got driven up. These healthcare companies had to pay for a whole regulatory framework that they had never had paid before. Healthcare companies left the market, and healthcare costs skyrocketed in these areas. Arizona was one of them because there wasn't a free market. It turned it into and this is why I went back to my power example. It turned it into a monopoly on power, but in this case, it was healthcare.
And you're right. You're right in a way, but at the same time, we as a government, right, whether state or federal, we justify the requirement for all Americans to have electricity, right, for fossil fuels to be widely available, and so we play a large role in that. I think the argument for healthcare is the same thing. We believe, right? Many people.
As in some people.
Yeah,
sure.
Believe that healthcare should be afforded to people, right? And not this. I can pay for this surgery, therefore I can get it, right? But I can get the surgery, and we'll figure out how to pay for it afterwards.
Well, you don't have to. I wouldn't say that you should do this at all, but medical collections doesn't go on your credit report. So that's what people do. Mm-hmm. They just take advantage of the system and they never pay their medical bills.
Right.
So you still get, and that's one of the reasons why healthcare is so expensive. Is because, and it exasperates it exponentially. So you have just a slew of the population that can't afford like a surgery, and we could talk a whole nother show on healthcare, right? And it's going to have to because it's a big topic area of conversation. But you're not incentivized to repay. It goes into collections, but you can still buy a house. Like, it doesn't affect your credit. So,
Sure. And then, that's one thing though. And I guess it
don't do that, by the way.
Yeah, sorry.
No, that's cool.
But just, I guess what I'm leading to is the left-leaning side, right, wants to understand the purpose of where that money is going, right?
Yeah.
Where are their dollars going, and how are they spending them? Yes, maybe some champion for healthcare a little more than others, right? There are many Democrats that are trying to be president right now believe in a mixed economy system, don't necessarily believe in healthcare for all. believe that there should be private health care
Sure.
as well.
Sure.
And so they're pursuing routes where every American can be insured, right? And I think this is how we need to start tackling all of our policy, right? Is in a way where we can satisfy a little of all Americans, right? Obviously, you would have to make concessions in different places, right? To be able to say, hey, we're going to provide for all under these circumstances, and we're going to provide for those that can pay for it under these circumstances.
But you're still taking the free market out of sectors of the economy, and that's where the problem lies.
Sure.
Especially when you're talking about bigger government spending. We're going to introduce more programs that are going to supposedly pay for people to, have the incentives that they want, that they feel like it's their universal right to have, right?
Right.
So that's where the problem lies, because the greatest, and I'm not saying we have a free market capitalistic society, we don't. It's more of like a corporatocracy, but that's besides the point. We're taking the ability of private industry out of the market by introducing, and you would probably argue that it might be a cheaper healthcare, for example, but it stifles innovation, it stifles the pricing of the free market. The free market will drive prices down.
Yeah.
Naturally, as far as they can go, as far as companies can afford to provide the products and services that it can go to make sure that they get sales and churn a profit, right?
And we do see that, right? We do see prices being driven down by competition, right?
Yeah.
But what I would almost say is, right, we're throwing money, we're creating markets around things that should be considered as being most important to you and most important to families, right? Why? And I'm not going to say because the fact that we can make money, but why is the healthcare industry so large in comparison to all other science and technology, specifically like research and development? Because they know that they can make money off of this. They know they can make money off of people's health. Right. And that's my concern in all of this.
Yeah, that's where the morals and ethics of corporate entities falls short, is healthcare in this country, is because, look, most Americans have shitty diet, they don't sleep enough, they're highly stressed, and there's a slew of others that introduce disease into the human body, right? And that disease is cured, or not necessarily cured, but over a lifetime of an individual, they have reoccurring healthcare costs because of their way of living.
Yeah.
So nothing's going to change in that sector of the economy until people take care of themselves better. And there's a slew of other reasons that they need to do it, not just healthcare. Mental health, one. So,
and I can agree with some of these things.
But having the government step in and say, we're going to provide you ability to access healthcare at a cheaper rate. It didn't even work the last time they tried it.
And I'm not saying that they approached it the correct way, right? But we do this with food, right? We subsidize or we lower the cost of food because we know that every American has to eat, regardless of what that food is. You could buy though a cheap tomato, and at the same time you could buy a tomato that's worth 10 times that same tomato.
The government subsidizes
because of how it's produced.
The production costs. They don't subsidize actual food.
I'm not saying they subsidize the food itself, but they do set price limits.
They incentivize.
They do set price limits.
Farmers to grow corn, right?
Yes.
Subsidized. Okay, we need all this corn for
but
this.
Corn's not even food in the U.S. case. Let's be honest, right?
But it doesn't. They incentivize. There's a million reasons why the government does what it does, and the government's going to incentivize all these independent operators, insurance companies, government contractors to do all these extra things. But the main point of the show, and why it's a troubling aspect in theory of the way society works, is that we're just going to say that this is the spending that we're going to do, and then we're going to catch up with, okay, now we need to make sure we have enough money to pay for it. And that's where the problem lies.
Yeah, and I definitely I can see that argument. It makes sense, but at the same time, if we do it in a responsible way, and maybe this is not the most popular of arguments. If we do it in a responsible way, it can work.
Great first show, though.
Yeah.
I think we killed it. We nailed the hammer. Hit the nail on the head is what they say. Yeah. So, we probably went on too long. Look, these are topic areas of conversation that are difficult to, even talk about publicly. You couldn't talk about this stuff at work because politics is out of the question in some places, right? Or at the water cooler, you might have people question you. So that's what this show is really all about. It's having difficult conversations about topic areas that affect people's lives. So this is our first full episode. I hope you enjoyed. Watch the replay. We'll have Q&A going forward in the future. We'll have a segment of the show to just Q&A. It'll be the last portion after our discussion here with me and Mr. Mike. And we're going to really challenge your thoughts on these areas of conversation. So get involved, comment, question in the comment section, whether on YouTube, Facebook, Twitch, Instagram. Send me a DM and let me know that I don't know what I'm talking about, or ask me a hard question that you're having, and do your own research and you're having a hard time finding a good answer. Like, I'm open to these types of conversation. I think this is what we need to have. There needs to be a show. There needs to be a broadcast that hits all these topic areas from every which way. That's why I have Mr. Mike here. He brings a full different perspective, and I might have gone on a little too long because this is one topic area that I have a passion about, and I've studied for quite a long time. So other topics area discussion, I'll have a shorter monologue and we'll have a longer discussion, but I'll try to keep it to a minimum as far as the introduction monologue. I think it probably went maybe 20 minutes today on that one.
A little longer.
Oh, was it than that? Okay, well, going forward, please subscribe to us, share. If you like the video, you like the video. I'm never going to ask you to do anything more than share and be a part of the conversation. So, with all that being said, we're signing off for now. Mike, any last words of...
No, just
business?
Engage us next time. I'll try and respond a little bit better to any chat comments that you have in YouTube or the other platforms that we're streaming on. So just as I see them pop up, I'll either bring it up to Pete or respond immediately in the chat. So
that's the whole point of this being a live show, is for us to interact with everybody after we've made our points and arguments, and see where the conversation goes. Look, we want this information to be out there and to grow. The only real way we'll be able to do that is not just by two guys sitting here talking about it, it's having engagement with an audience. So make sure that you're doing that next time for the show. And this is our first full episode. We're only going to grow from here. So interact with us, be a part of this program, this movement of challenging thought constructs of reality. So I wish to see you guys next time. Thanks for joining us today.